Welcome to ABC123Trader. I'm just doing another video just about a little bit of education about how to trade Ninja Trader a little bit on the futures market, plus some more about the indicators. If you have any questions, feel free to ask. I'm just on the intro page, and then I'll have to go to the second page by law. So, of course, trading can be risky, and to only trade money that you can afford. And I'm not responsible, and this is for educational purposes only, and I'll start in a couple of minutes here. We'll get going in here right away. That's the screen I'm on. Okay, now I go screen. I have to reverse it. Good morning, everybody. This is Mike, and I'm going to want to, if you guys, anybody online today for this Sunday, I'm going to do a little bit of education for you guys about not only the Ninja Trader charts, but as well, just if you have any questions of how to use indicators, or if you maybe have any other trading methodologies, or anything you want to ask, basically, and we'll go from there. And what I'll do is I'm going to switch to, let me see what you got. Yeah, this is the, which one am I on here? Check one more thing here. Not that chart. Yeah, I'm going to go to this chart here, and we'll start up right now. Alrighty, and now what I want to show you, I want to show you something. I want to show you a top-down approach of how to trade using some of the indicators with the swing scanner, 4-hour charts, and work our way down. And then I'll be using some of the indicators, but also how to look for support and resistance. And that's the bottom line. Is to become a consistent trader, if you can't find out where all the major support and resistance or where the liquidity is, then you'll have quite a bit of difficulties. I mean, you can scalp, make a few points here and there, but what this webinar is I'm just doing it for simple questions. If you guys want to ask any questions, feel free to, and I'm going to be showing you different charts that I'm going to teach. But if you have a chart saying, you know, Mike, I'd like to know about a 15-minute chart, what to look for. I'm looking for uni ranker, and this is what I'm trying to do, is for you guys to understand, and I want to educate you guys in order so you can be a consistent trader. So with that being said, the very first thing that I'm going to be doing, whoops, up here. What I'm going to do, it doesn't matter which chart I'm using. For education, what I'm going to do is I'm going to switch this, but to get rid of all the indicators right now. Let's get rid of them all. And what I'm going to do is I'm going to just put on, we're going to start from top down so you can understand what I'm going to be doing. I'm going to put on a swing scanner. Okay. Put that on there. Second here. Hopefully it won't lock up on me. But I have to switch my data series to a daily chart. Reason why, what we try to do, it's up here, perfect. Look at that. Perfect. So what I'm using is a daily chart, okay, guys? And what this is, we are in the buy phase. What I've created are buy and sell phases. See previous timestamps, timestamp, timestamp. Next timestamp is down here. It's literally telling you in a couple of days. Okay. Now, if you look at it, I'll show you how effective that is. If I already told you that there was a timestamp coming up here, or let's say right here, in a couple of days. But look at previous history. Look at that. Away we go. Look at that. Away we go. Here we go again. Away we go. Okay, here we go again. Away we go. How are you doing? Anyways, I'm gonna put it on pause. How's it going, Brett?
Good. I need your help for a sec. Sorry.
What do you need?
I haven't have a clue what this Antonio guy wants. Or the security guard.
Okay. I'll be back in a second. I'm in Spanish country here. Okay, just hold on.
Not a. Hey, do you have a corkscrew? My sister's got a bottle of wine out here. She needs a corkscrew.
As you can tell, it's Sunday.
Yeah.
I'm YouTube live.
Oh,
So you can see
hola.
everybody.
Yeah, I'll just grab it and bring it back. What? No. My sister's here for the first time. Yeah. Where are you? Oh, no, sorry. The one that's off the yes. Oh yeah, that's what you came for? Yeah. My sister comes down. She's got a Tom Brady jersey for me last night. I go, nice.
Are you a Brady fan?
Not particularly. I'm more of a Tampa Bay.
Yeah.
It pisses me off. He shut me down for some money the other day. Why? What's his chance on? Drink tequila.
Oh, that's too funny. Too funny, too funny. Anyways. Well, if you have any questions about reserving a swimming pool in Spanish because of coronavirus, whatever. Anyways, tell them to enjoy their tequila.
Nomás que para que a la hora que quieran salirse ellos.
Dice, de amigos es solamente añadir 30 más minutos y no más.
Sí.
Es finito.
Para que no haya.
Ya.
A mí no me gusta hacer con la gente.
¿Es más o menos?
Sí, sí,
Okay, okay,
no hay problema.
okay. Este mi madre.
Señora, ¿cómo le ha ido?
Sorry guys, I'll get to you in a minute. Yo soy trabajo ahora. Es YouTube.
Sí.
Viva. Y ahora, ¿cómo se hola? ¿Cómo se hola?
Hola. Eso.
Okay.
Nomás que yo ahorita un ratito más yo me voy a ir. Porque tuve un problemita familiar. Me voy a ir y va a venir mi compañero. Pero voy a esperar que salgan ellos de alberca para que estén más tranquilos, no tengan problemas con mi compañero.
Okay.
Es que me falleció mi madre.
Okay.
Ahorita yo estoy esperando nomás que me llegue mi compañero para ir, para poderme retirarme yo.
Okay.
Yo no los voy a dejar solo aquí.
Okay. Okay.
Hello.
Okay. He's a new guy here. Anyways, so let's get back into it. This is almost like a comedy channel. Okay. So what I was trying to show you earlier was the daily chart. And with the daily chart, as you can see, consistently you'll notice there's possibility of becoming consistent or being hopefully on the right side of the trade. And so when I start from the top down approach, as you can see, this last phase here, this was my line in the sand, okay? And so when I'm looking at it, once I cross this line, I'm going to be, I do position trading as well. I have different accounts. So I'll put in a few contracts and I'll let it ride for a week or two. And so when that happens, if I'm on the right side of the trade, I'll let it run. If I hit break even, I'll shut her down and I'll wait till it breaks off again. So currently, because the phase is almost done, that position so far is around 763 ticks. So what I do is when we're doing a top-down approach and showing how to find support and resistance, this is actually what I start looking for, and I get my mindset starting using this chart. I always start with longer time frames and I work my way down. But I want to see what the, let's say, the Fox Business guys or the CNBC guys or whatever they're saying on the news, just to try to get us jump into it like little hamsters or whatever. And we have to look between those lines to see exactly what these guys are doing. Like, for example, Bitcoin's on a run and all that other stuff. You know, we don't want to chase these guys. So you will, once you start noticing, let's say, for example, a phase that is reversing, and we have to be patient. If you're not going to trade, you can wait off. That's fine. And what will happen is there's going to be once a year or maybe twice a year, when they talk about corrections, as you can see, there was a correction here and a correction here. They both reversed once and twice. And now, look at this. It's back in rhythm. Okay? So what I do on the daily chart, and I actually have to update this indicator a little bit, because one thing I don't like, even though where this line in the sand is, my actually price point, I'll put it on a 15-minute chart, is, there we go. It will shift a little bit. So this is the line of the sand, and if you notice the line, this where the line of the sand is, see how she was oscillating and then she takes off, breaks through, and when it comes in that area, see where it's vibrating again. Why would it vibrate? Just on that time signal that I gave you. I can say it's crap, but yada yada, but this is what I'm getting at. So this is what I'll use. I know this is my first marker. So once I do this, let's say you only need one chart and you don't have a lot of computer power or whatever. Let's say I got to save my resources. What I'll do is I can take this line in the sand. I'll put a horizontal line right on that line, and then I can just get rid of the chart. And what I'll do is I'll make sure these lines are on all charts. If you go there, I set it as a default template. So anytime I do a horizontal line, it will always go on all my charts. So I don't have to create line after line after line. Okay. So now what I'll do, now I want to show you something else. And this is actually not even written code. It's just the basics and what I want to show you. Now I'm going to turn off my indicator so you can find out how you can actually predict the market, because we need to look at the basics before we can move ahead here. What we're going to do, I'm going to turn everything off. But what I'm going to do, I want to put in, let's put in 120 days, 4 months of data. And I was doing a webinar just right after the US election, and for about 2 months the market was just like blah, or just before then too. But you want to, what you can do is to make sure you're out of these ugly areas, or see if it's going to be ranging, or if you're going to see if it's trending, and we're just starting trending again. What you want to do is, when we do a 60-minute chart, and like I said, I have 120 days of data, or 4 months. You can go 6 months, it doesn't matter. What I want you to do is right in this top corner, just switch it to a line chart. I'm going to switch this color too. I don't know if we can see it on it's great price marker. There it is. I'm going to make it yellow, something really bright so we can see. There we go. Turn off these. Put my objects here. Okay. And see how they do these crazy spikes, and then she's trending, spikes, trending, and this was that Friday trade I took, and it continued up. Well, look what happened. Let's really crunch this down. Okay, let's look at the election of, what was the election? I can't remember if it was November 6th or November 7th, 8th, or whatever. But see how right here it's always tapping. And this was ugly range times. Okay? And then, for fun, and I know this is the basics, but you'll understand why later. Let's just put extended line. Let's put an extended line. And let's move it. And let's bring it down to the block for fun. Or actually, do I want to do it that way yet? No, I don't want to do it that way. I want to do it more because we are day trading. You'll look at the spikes and see how it vibrated on this spike, this spike, this spike. So you can see we're kind of within the right ballpark. Let's go like that, more so. So you can see it try to tip and reverse. Touch those two, as many as possible. So you know if we do get another drop down, it will come down to this level. But this is what I really want you guys to understand while we're doing this. Open this up. And the reason why I just put it online is really want to see the support and resistance, because look at this. There's a benchmark here. We're using 1 hour charts here. So for a few hours, you can see where they're just holding, where they're holding those nice flat areas. This is position holding. Okay, we can literally go like this. Just say, okay, there's an area, another area right there. So you pop through, and you can see where top of this little one, but right here. Okay, and then let's go to this next level here. Never actually hit here. So, but what I want to show you, let's extend this. So I want to show you how you can consistently be consistent. When you see where we hit the bottom, actually, well, we can do that one. Whatever. As long as it's touched as many times as possible. But look how it literally hammered that one day. We had a support and resistance. Actually, I had it like that. But as you can see where this area I hit, this is where I traded, like I said on Friday, when I used those, the market maker and everything. So when you do your morning analysis, I showed you the day chart, and that day chart to show you what your mindset could be within the next week or two, or and keep going back and forth. Then you can use this chart, which is, I didn't do anything. It's none of my indicators. It's just NinjaTrader, just to get a feeling of how the market is vibrating. And you can see there's a resonant angle, continuously resonant angle, always pretty much the same angle. And you go here, you can see where the major support resistance is. Now, if we take one point of control from the election, let's go from the election. Okay, November, I can't remember what it was, November something. Let's go from here, just before it started spiking. Even though we were playing with it, you can see where all the volume is. This is where the play is. So if the market is going to correct, do another major drop down, this is the area of interest we want to be. This is if it's a deep retracement. But now she's starting to move up. We finally had our spike. We had a couple of drop offs. This is what they do. They grab some more positions in order to push up. More positions to go up. They did a mini one here, support and resistance here, and they're going to do it again. Now what I'm going to do now is we're going to go into a few of the indicators, and we'll go from there. But before I continue, I know we have a few users online here. Are there any questions that you guys are interested in on any of the indicators that you want to show? Give it a few seconds here, and then you can go from there. Candlesticks. Okay, no one's asking questions, so we'll go from here. So one of the indicators I'm going to show you is when if you're, some people like Ichimoku, go to the Ichimoku file. I'll let her load up here. Boom. Okay. Perfect. Okay, and there's your day trend I was showing in the previous example. What I did is, this one is the Ichimoku cloud that I created. It's not, of course, not just the Ichimoku methodology, but I put in, there's about 4 or 5, well, you can see all the rules right here, okay? When this thing starts increasing, you know, the more confidence that you create within the trade. So what the letter D stands for, it's the day trend that I showed you in the on Friday's video, or Saturday. So this is the day trend, and as you can see, and I said when the day trend activates, it comes back down. This is your buy limit area, and away you go. Go for it. Second attempt. Even though we're going against the trend, I'm just showing this is the very first phase. The letter L is called the lead tracker. Jose, he had the methodology, and so I wrote it with him. And so basically, you want to stay, as a general rule, you want to stay below the lead tracker, right? So I mean, if this is red and this is red, you know you're going to be trending down. And so with the lead tracker, where the current conditions are is we're on the buy phase. It never did the retracement, and that's okay. Now we're above the lead tracker, and see we can take a trade in. You want to take it earlier or later, it depends what your risk and reward is. And then from 1, 2, 3, 4, and 5, it's the different rules of the cloud. I think I have to check what my rules are again. I'll have to post them. Rule number 1 is once we, whatever those Kijun spans or whatever, once we get above this cloud on the positive side, number 1 will activate green. Okay? Number 2, let's see if it's correct here. Yeah. Number 2 is if this is below the blue line. If we're above the blue line, it will be green, and if we're below the blue line on the price marking, it will turn red. Number 3, let's see here, number 3, 4, and 5. Number 3, if we're above the cloud. Number 4 is, geez, I can't remember what number 4 is. I'll check what my number 4 is again, guys. I apologize. I have to read my list. But number 5, what number 5 represents is if this cloud is green. If the cloud turns red, number 5 will turn red. If yeah, because if you're above the cloud, in the cloud, and all that. I just can't remember what number 3 is. And that's what you do. So when these numbers are getting higher and higher, or more confirmation, this thing is going up more and more and more. And what we do is we try to get it as early as possible. At one point, what will happen is when the crossover comes, and see this box here? This red box here? Well, what happened, the red box, is it broke the lead track, came down, and so we were looking for possibly of a selling opportunity to go down, but we're breaking through the cloud so you wouldn't use it. So the next phase is a green box will appear, and then what we try to do is get within our entry here for a continuation. That's your pullback. It didn't really show it that often here, and this one, of course, you're not doing it because you're going against the trend. No, this one's correct. We're going up, reverse up and in. The same thing here. She broke down, came back up. This is a retracement level, so you can have a limit order. You come back in, and away we go. I should have extended these boxes, and this is what the Ichimoku does. And so, perfect example is this one. You know, you went from let me see here. Yep, a buy phase to a sell phase, and this would have been pretty much all red here. And it did a deep retracement, so we could have tried to take an order here, get knocked out, second order here, maybe knocked out away. let's see, we wanted to see what would happen on the lead track. Now, what you'll notice also in the lead tracker area is when there's yellow, if you're just using lead tracker information, sometimes what you can do is once it gets into this cloud, you have a nice thick cloud, you can wait till you pop out the cloud to get out. Same thing in here. As you can see, it came into the cloud, wait till you get out of the cloud and pop out for a trade. Same thing here. Vibrating. We don't want to be in that stuff the way you go. Over and over and over again. Focus. Find any other scenarios here. And then, of course, this is the breakdown. Boom. As soon as you cross this is your first trade here. Okay? And that's what I want to show you for the Ichimoku cloud. Now, what we're going to do, I'm going to also show you a 4-hour chart. I'm not sure if I did it last video. Let's go to data series here. Go to a 4-hour chart, so I'll have to type 240 minutes. What I'm going to do, get rid of the Ichimoku fractals. And let's just put in, for example, well, I'm going to do it again because time scanner. Time scanner. And we're going to switch it to a 1-hour chart. So you set time 60 minutes. This means I'm not using a 240-minute chart. I'm using a 60-minute chart for analysis. And then what we're going to do is we're going to see on the longer term if the rhythm is working properly. Okay? And then what we can do is we can also, no, I won't use the graphic. Let's use, I'm going to put stop loss again. I'll just make the numbers a little bit thicker here for this example. Put them for 3. Let's just change some of the color so it can seem maybe a little bit brighter. Something like that for now. There we go. So last video, I was trying to show you of what the stop out represents, and I'm going to do that again. I'm going to increase as many hours as possible so you can see our data mining. There you go. So when we're looking for support resistance, this is one of the secrets about I do on the stop out is because the banks, what they try to do is look for our liquidity. So we were on education, and you put your your stop below the swing, and away you go. Put your order below the swing, and away you go. Here you go again, here you go again, here you go again, and guess what? This is what the bank does. I need your liquidity, I need your liquidity, I need your liquidity. I got as much liquidity as I need, and away we go. So all you guys think that we made all this money, they just hooped in. So what you can do is, if you want to be a real conservative trader, okay, you have the time, and many of the times they'll do it during. See, they did this one in the London session, but they also do it in the New York session as well. But what you can do is you can be, if you're patient enough, you can wait for it. Once you get that position, you're off to the races. Now imagine this. Let's say you watch liquidity, watch this liquidity, and she's just popping up. Let's say you got a summer red in here, seeing they're going back up. And now you're off to the races all day. Let's say 2 years. Isn't that beautiful? That's the key. So, but what we'll also do, we're doing this. Let's see if the rhythm is correct. 8 o'clock till 9 o'clock, working well. 9 o'clock to 3 o'clock, yeah, making not much of a big push. 3 o'clock to 4, break, holding off. Sell off was okay. 1 o'clock in the morning, because this is a 4-hour candle, right? We're doing a 1-hour analysis. it is working to a certain degree. And then this one up to here, and then of course there's your big fail that they wanted to knock the belly out. If we look for support and resistance, we'll probably find it anyways. So where we are now, because we're at Sunday, it looks like the market, they still want to push this market up, maybe to this peak level, till 6 in the morning. And then at 6 in the morning, they'll probably sell it off. So they'll probably bring up their liquidity, knock out all those guys' stops, see if it breaks it even higher, maybe not. And then at 6 a.m., the major sell-off for the day. So, and then they'll do that punch down, come back, punch down again. That's what I'm going to be looking for tomorrow. Because they did the big run already. Right? They made their profits. So what they do is this is what I call the banker's candle. Okay. What I mean by the banker's candle is they punch it down, then they reverse right away, which means they want to go down. I know it sounds weird, but because they're right at the peak here, they knocked everybody's stops out. Then they knocked, like I showed you, like in here, they knocked all the micro stops that we don't see. And they did the reversal within that 4-hour period. So they're going to get right to the top till about 6 a.m. Get their liquidity one more time, get everybody stops, and then run it down. That's the game plan. You can see it. After a while, when you do this a number of times, you'll notice. Okay. Now, what I'm going to do is I'm going to add one more chart. What I'm going to do, I'm going to add. I'll do a YM. And if you're looking for during the day while you're trading and saying, you know, I don't have enough time, I can only trade for an hour or two, or maybe even a half an hour, you know, first thing in the morning. What you can do is we'll put in I'll put in a 5-minute candle for now. 15 days, good enough. And what we'll do, click on that consolidation for those dots. Okay. What we're going to do is I'm going to add an indicator called levels. There are new levels. Here you go. Boom. What the levels are. First thing in the morning. Kind of like the 915 in this sense, but it takes a bigger range. What we do is create a level. This is your halfway through from the open to the close. And what we do is we try to take a trade out of this area, and we can use these for targets. So come back in, see how it literally touched the line. You hit target 1, target 2, and see how it comes back to the Fibonacci numbers. Watch our price action, comes back down, back to level 2. And if you look at it, look how they finished right to the level 4 line. It's all computer algorithms, guys. It's and what I mean by that, that's the banker's computer algorithms that we're trying to data. And so what we do is, as a conservative trader, we just have to wait and say, well, we'll play it really in the zone. We'll wait till the breakout and see what happens in the confirmation. So let's say you're being a conservative trader and say, you know what, I can only afford going from here to maybe level 1 or target 1, even to hit target 1. 42 ticks, regular contract. I won't talk about micros here. The micros, you might be able to do a few more here. But see, that one alone is $200. Okay? And you can do this over and over and over again. What happens if we use ES? ES is way more choppy, slower. First thing in the morning, we're waiting. Break down. Target 1. Back right to the middle line. Okay? 50% marker. Breaking out. Here we go. These targets for micro targets. Target 1 or fib target 1. Now, let's see. That's 10 points. That's a $500 move on an ES1 contract. Let's see, it went a few times, and guess what? See how this little tick right on the bottom? Level 3, once again. It's all the computers, guys. Now, and I use that as well for, let's say, for when I'm trading, I'll say, you know what, if I can make a few bucks for the day, I'll put this in here. And then all my other trading methodologies, if I'm patient enough, I'll wait for it to come to my zones of interest in order to take my longer trade. But I'm saying if you're scalping, trying to make a few points, this is one of the ways you can do it. Okay? Now, let's add what I showed you before. I'm going to get you market cycle today, too. So here you go, where they drop down. Remember I said this was my market micro point of interest. So you break down, hit fifth target 1, see where the fifth target level 1 is. So I might have cashed out here, but she broke all the way down, looked like it was continue on, and then she reversed up. And see how she vibrated and tapped 1, 2, 3, 4, 5, 6, 7, 8, 9 times before she failed. So this is why I use the market maker. And when she broke down, she came up, and look how she vibrated within the market maker again for the continuation up. Okay? So if you look at it, one zone of interest, deeper retracement, get the stop outs, comes back, gets liquidity, make your profits, get to the deeper retracement. Now let's go further to the deeper retracement, see where they are. Now look at this. Yesterday's, right here. Yesterday's levels. And hit it right to the level line. Let's see if we can go one more day before to the level line. Did it go down to the level line? And let's see where it played. Played in this level line. Up, she came back down just to this here. Oh, to the market maker line. So it's one of the two. Okay. Now let's go to your minute trade. What should I do here? Minute trade. Let's go ahead. I know the things to trade yourself. That. And let's go to a 1 minute chart. Flip. Okay. Let's go to the very bottom. Here's an indicator you guys can try out. It's called the Williams indicator. Boom. Now, it looks like it's really noisy, but once you can understand it, there's 4 methodologies in it to help you guys assist you in trading. And you can do it one of 2 things. The simplest as possible. So you can see the color code. See how it's all nice and green here? Let's open this up. Okay, well, you know what? I'll keep it tighter so you can see the green. See how the green bar is on the edges because it's the outskirts of the green. See it's how green? We know we're getting the right side of the trade. When it gets to base, we should retrace it when you go again. Same thing for the red. It's coming down, red. Retrace. Away you go for your trade. That's on the color coding, okay, guys? And now what we have is this looks like an exclamation mark, the letter M, the letter S, and the letter A. The letter A, I showed you before, is the buy sell activate, which is a line in here. The S is the super trend. The M is that momentum panel that I gave you, but I only have the single line compared to that butterfly that we have that I gave you guys. And then I'll show you what the gold represents. What the gold represents, if you're trading, is a lot of energy in the market. These exploding. Means they're dumping contracts or pushing hard. So if you look at, for example, let me see if I can do it in the morning. Should we do it first thing in the morning? No, that's okay. We'll do it right there. 10:30 in the morning. See, there's a gold bar here, gold bar here, gold, 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 gold. That's because I'm saying it's high energy. Exclamation mark is yelling at we think, guys, they're pushing. It doesn't matter which direction, but we know if she's pushing down, this is your move going down. The white bar here means it's peaked out. And then the green, it's just back to normal energy, but it's pushing up. Green means pushing up, red means pushing down. So the green means it's normal activity again, pushing up. And then guess what happens again? Gold, 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 gold. It had a quick impulse move, but it hit some resistance, but they're pushing hard. That's what it means. Again, another big impulse move, starting to turn gold again. It's pushing down. So if you're waiting for those impulse moves or those aggressive moves, this is what that gold represents. But when you line things up to prepare for your trade, the letter M is the downtrend, the green, it'll turn green, it's the uptrend of the momentum, of which way the momentum is moving. So imagine this. If you were, let's open this up. I'm going to go F7. We're just crossed over. Boom. If I can move it properly. See that where that line is in the sound is when the momentum started activating, or the momentum came to well, actually it's one back. Momentum came from a buy to a sell. The M activated, would have turned red. The gold would have activated, saying our momentum going down plus these two are really pushing hard. And away we go. Okay? The letter S for the super trend. See this olive color? This is a very aggressive moving on the super trend. And if it's a green color, let's see if I can find a really good one here for an example. Right here, this green color, these colors will change. If it's not one or the other color, it could be beige, yellow, orange, red, white, or whatever. It'll be kind of like a neutral color, and it will say, it's just doing normal activity. And then for the buy sell activator the buy sell activator is green because we are on the north side of this trend here. So if we're looking at current market conditions, yeah, there you go. Our buy sell activator is still above the 0. Very flat energy because it's not these olive colors. It's just one flat. It's the end of the day anyways. And then you can tell the momentum panel is pointing down, but they had high energy right at the end. Probably that high energy was this last part of the day. Okay? And then so what you do, what you'll notice when I wrote this, and the reason why I called it was the Williams, I was trying to use a Williams methodology in the beginning with fractals and Williams, and so I kept the name because it was his methodology. The histogram is still the Williams itself, just the histogram itself, but the logic of the colors and everything else and what's the map behind it, I switched to myself. But the basic original Williams was this histogram, but then I added everything up together. Now, what you're going to notice is you're going to see a purple bar and white bars. Because it was trending so hard today, it didn't work out the way it usually does on normal market conditions. What you'll notice is if it's a white bar, it will go from one point to transition. Then it'll turn a white bar again, and this one is so small, this white bar. Let's go here. It's a little mini white bar there. See how it switched? And then she struck down with high energy. Then all of a sudden this bar is purple. Why not white? What the purple means, all it means is it was still a lot of high energy and it peaked to the bottom as far as possible. I'm not talking market price, I'm talking energy of the histogram. So what I found out majority of the time, not when it was trending yesterday because it was kind of a weird day for that big drop off, right? What you'll notice on normal market conditions, drop down, retrace one more time, like they talk about the divergence and all this, and that's where your bottom is. So when I see a purple, I will look for it to see if it's going to go one more time and reverse. This one kept on peaking with high energy, came down, peaking high energy once, twice, and then there was a reversal white bar. See, it wasn't as much, but it is working. And then this one, 1, 2, 3, and she just died off at the end of the day. If I go to let's try a Y enter and see what happens. Let's go to hopefully to a regular market condition. Hasn't been any regular ones lately. Yeah, look how flat that market is. Okay, whatever. And that's how you use it. And then the last thing is there's two numbers in the top corner here. Okay? What these two numbers represent is the price action or the volatility. Okay, so basically what it looks is it looks for a very frequent average, so it's averaging 6 ticks per bar. So if I go to an NQ, I can see this with the sun. See, it's running 2.5 points or 9.25 ticks per bar. And so what you do when you're using this, depending on risk versus reward, staying consistent, on the background here, as you can see, there's green, blue, red, yellow, gray. There's an option when I created for the Williamsons, so you don't risk too much, or if the market's too volatile and you're not used to controlling, the different energies. So here's, I call it extreme tick range. I shouldn't call it tick range, but anyways, this background. If on the NQ on this one, if it was moving more than 50 ticks a bar, it's too risky for me because I'm on a 1 minute chart, so it's moving $250 a minute. Okay, a warning was 40 ticks. If it's more than 25 ticks a bar, I want it green. So for myself, is I'm used to on the Nasdaq, I'm used to working on green or blue, somewhere within this zone. So if I ever see the market green or blue, I can trade it quite easily. I can read the market. Yellow is getting a little more risky, but all of a sudden here's a red one here, right? This one just drops down, bounces back up if you're not used to it. And all of a sudden you get whipped out. Or right in here first thing in the morning. See how you're whipping out? Guys lose their money, lose $1,000, done, they're done for the day. And that's why I have these color codes there. The Williams is very powerful if you get used to it and understand it. You can, yeah, it's a really, really good indicator to tell you there's a lot of information. Now what I'm going to do, I'm going to get out of time. Let's go get series here. I'm going to switch it from that to, I'm not sure if you guys don't have the Unirenko T-bars. I wrote this one and I might have to upload it on the Discord. I'm not sure if it was in that pack. I'm going to use a Unirenko 1, 5, and 10. Okay. And okay. Yeah, okay. And what I'm going to do, I'm going to get rid of the lows for now. Some people like Renko, Unirenko. As you can see, they see it feels a little bit cleaner. And so what you can do on the Unirenko, and what I really want to show you, and this is about that pullback methodology. I say pullback. Always look for the pullback. What we're going to do is we're going to have one. There's a few indicators on here. All the Unirenko stuff, but we're going to just use the original tick range. Okay? Here's your tick range. It's all green. That was working right. Let me go to a buy-in here. Let's make the market a little bit better here. So let's see if that. Okay, the Unirenko. I'm going to turn off the dark colors for now. There we go. Okay, the Unirenko tick range. So the key of using the Unirenko, we always look for pullbacks, guys. So, for example, I'm going to put the market maker on there later. Let's look at today's example. Today's market, see how she's whipping up and down, first half hour. Now what we want to do is, fortunately the market just was so ugly in the beginning. She bounced down, she reversed out. Now she's whipping back and forth. And when you see noise like this, just stay away. And you'll understand why. I go back to previous news. You mind why I am? Yeah. Here's a regular harmonic thing. That's how you can tell the difference. From that, at the end it was harmonics. Okay, but in the morning, let's go down 30. 30, boom. Once you're seeing it whip out in the middle, back and forth, back and forth, back and forth, the banks are trying to take your money. This is what it's all about. Then they do that punch, and then you're trying to chase the trade and you get knocked out. Then they knock you out. They do this again, but there was no harmonics. How you can tell when the first harmonics start is once you do an impulse move, it comes back like this. There's one, there you go. Even here you could have moved a few points, but see this little yellow square? That yellow square is setting this is the position I wanted him to get in trade the way to go. Then it came back, knocked off the stops, did it again, and that was your runner. Then they're pouncing it up. So it came back up once, came down. There is a square, you could have tried it. Came back up here, second square, away to go up. It's your next trade, right here. Then you go up. And then now you're in harmonics. See how nicely it taps and goes, and then it does the first impulse move comes down, saying, darn it, actually that almost, oh no, the reason why there was no square is that. Okay, but you could have tried it here, then comes back down, Once you're in harmonics, and you go back and forth, and that's the key about retrace, because when you chase a trade, it's saying, okay, it's going, and then all of a sudden you buy it here and it comes back, getting back. And this one worked, but let's say from here, 945, and you're on yes, right? So from here, let's say you catch it right here, and you're freaking out. And let's say from here, and it comes down to here, because you're 20 ticks, you're saying, I can't afford losing $100 and shut down on you have to got you $200. You just shut her down, and then away she goes. Then you got your back to break even, and she comes down, you get nervous again. But if you wait for you get into this zone, you already made your 200. Over and over and over. But like I said, we have to look. You look to the left, trade to the right. There is that warning, ugly zone of interest. So let's place a rectangle here. Cut across. Boom. So now we know we hit our deep pullback, first retracement. Come up, hopefully make it. We're getting into our target zones for shutter now. So let's say even we waited for the second impulse move. First impulse we missed, second impulse we get in, away you go, boom, done, 81 ticks, $400. So, but what I also added with this, I added a few things. Now I'll show you. On the unilateral side. Pivots. Don't do the price bar for now. Volume fluctuations, I won't do that for now. And price volume. I think these are the two I'm going to add. Price volume. Whoops. And pivots. Boom. There you go. So what will happen? See this red box here? Or the white box and the yellow box? What they are. See how right here, and here, and here. This is normal volume. And then this last candle that was vibrating up and down, up and down, up and down, up and down. This is 245 contracts within one little block. It's not, it doesn't sound like it's much, but when you're using micro contracts, you can see where we're hitting bottlenecks, popping through bottlenecks, popping through bottleneck, volume up, reversal, and we can go from here. And then now you know this zone of area, they had a lot of volume. When you know that, rectangle, boom, cross, cross, lock this, let's move it right across as far as I can for now. Not sure if I'll ever get back to it. And away we go.
Hi, Rollins. How are you?
So anyway.
Did you have a good nap?
So anyways, this is what you can do. As you can see, if I move it right across here, so those three volume bars, let's see how she vibrated for a while, and now you have the support and resistance on the other side. And so that's the key. That's the key. I'm just trying to show you different ideas. And if you, like I said, you guys, if you have any questions, you know, feel free to ask anytime. But that's all I'm going to show for today. I just wanted to do a little bit more education, and I'm going to be doing different indicators, you know, every day, different ideas. And then I'm going to be trading live pretty soon. I'm not sure if it's going to be tomorrow or next. I'll start next day. But I'll be getting really close to get this thing going. So, any questions before I log off? I'm going to give it 1 minute because I know there's a delay in our feed. So 5 minutes, yeah. I forgot to show you this one. Actually, I'm going to show you this one right there. One more. Market cycle. This is the last one I want to show you here. Okay, so what the market cycle is every day, as the session starts again, I start reporting different times. Pre-market, I call this dead zone pre-market Asian Center, pre-market London session, pre-market New York session. If you want myself, this blue zone here, if I'm doing New York session, I'll watch which direction to get into. If she pops down out of the blue zone, I take my trade. It takes a while. What was the time before it took off? This one was quite quickly. It was about a quarter after. Yeah, 47 after before we could get in. If you go from day in and day out, so we have to wait. When we're still in the zone, maybe take the break off. If we look at the support and resistance, didn't work, and then also you see the rejection, take it again from the other side. That's all I'll show you on this one, and I'll get into the numbers later. Okay. Other than that, you guys, I'll do another video tomorrow, and then what I'll do is we'll start trading live here pretty soon. If you have any questions, just make sure, like I said, guys, just you know, join or let me see here. You know, that's our Discord group. If you're not on the Discord group, and also even on YouTube, these videos are for you guys. It's for education. So, you know, all I want you guys to do is just try to be a very consistent traders, and you know, increase that 401k or whatever you guys do it for. Other than that, just pinpoint your trades, trade safe. You guys have a great day. Take care.